Welcome to another episode. My name's Jose Najarro, and today I'm trying to find the best gaming company. So in today's episode, I want to take a look at Activision compared against Take-Two Interactive and against EA Games. So let's get started. Right now, we're in the middle of a market correction. The overall market is below 10% from its all-time highs. We're not sure. No, I don't think anyone can really tell how low this market can go. But right now, I do still have some cash at hand. So I'm trying to see if I should build up some positions in my old companies, if I should open up new positions in new companies. So that's the main reason I wanted to do this episode. All the information that was taken, that I collected here was either taken from seekingalpha.com, Lazy FA, Simply Wall Street, or the company-specific investors relations website. The first thing I want to take a look at is the revenue, the trailing 12 months revenue. So this is the revenue of the past 12 months. I think most of these companies are in quarter 3, so this includes quarter 4 of last year, quarter 1 of this year, quarter 2 of this year, and quarter 3 of this year. Right now, the way I have it here, the chart shows the first one is Take-Two Interactive, the second one is EA Games, and the third one is Activision. And this is just for different quarters. One thing that we can actually see here is Take-Two Interactive is the smallest out of all three. It is smallest, but we can see it does have a nice growth going on to it compared to the other two companies, right? We can see Take-Two Interactive was around the 500 million 3 quarters ago, and now its trailing 12 months is reaching close to that $1 billion mark. So I think that's pretty impressive for them. But we can see EA Games here for this quarter sitting at 1.5 billion, and Activision is just killing the game here with almost $2.0 billion in trailing 12 months revenue. And we can see pretty much most of the previous quarters, if we take a look at just the trailing 12 months revenue, Activision seems to be the one on top. So here I'm gonna have to give the first point to Activision based on just revenue itself. All right, so next I wanted to take a look at revenue growth for the upcoming 2 years for these companies and see which one is growing the most. I also wanted to take a look at their forward PE ratio. So the forward PE ratio will be the 2021 expected earnings per share, expected non-GAAP earnings per share, and the current price to give us the forward PE ratio. So first, let's just look at revenue growth. EA Games next year is expected to grow 5%. And the following year after that is expected to grow 4%. So it is growing. EA Games is growing, but it's growing at a constant pace of about 5%, right? 5% next year and 4% the year after that. Activision again is showing a stronger growth than EA Games. Activision for this next year is expected to grow 5%, and for the year after that, it's expected to grow 9% even more. Take-Two Interactive, even though it was increasing its revenue, analysts expected to actually provide lower results. So 2019 was a really good year for them, right? 2019, like we saw here, was almost a 50% growth. Next year, they're expected to have a 7% growth, so that's still pretty good. But the year after that, for 2021, 2 years from now, they're expected to go down about 7%. So they're actually showing a decrease in revenue growth, which I'm not a huge fan of. So if we're just looking at growth here, I think Activision again takes the cake. Next, let's take a look at the forward PE ratio. For 2021, EA Games is expected to make $4.93 on non-GAAP earnings. So that would give, with the current price right now, it closed on Friday at $101. It gives this company a forward PE ratio of 20.5. Activision is expected to make $2.83 and is currently at a price of $58.13, and it pretty much shares a similar forward PE ratio to that of EA Games of 20.5. So both of them are priced pretty equally. Next, we have Take-Two Interactive. Take-Two Interactive is expected to make $4.38. At the current price of $107, this company has a much higher forward PE ratio of 24.5. And to me, this is a little confusing, right? Usually I see forward PE ratios being higher when a company is expected to grow more. But based on this revenue growth, it seems that Take-Two Interactive is not the one to be expected to grow more. The only thing though that I can think of is Take-Two Interactive is the smallest of these three companies. So I'm guessing investors believe that since it has such a small cap right now, it can grow at a faster rate, and I'm guessing that's why investors are willing to pay a little bit more money on Take-Two Interactive. But right now, I think Activision and EA Games are a little bit more valued at the moment. So yeah, let's take a look. Next we're going to take a look at expenses. So here I'm pretty much just want to take a look at two expenses. So if you guys are looking at the chart right now, I have two charts. Again, these are the trailing 12 months. And on the top, we have research and development. And on the bottom, we have sales, general, and administrative. And these to me are two, if you guys have watched my videos, these are two expenses I really like to take a look at. Research and development, especially for a gaming company, right? They need to make sure they're investing in increasing their IP, in developing better games, developing better animations, have the proper tools to create that. So I do believe that they should be focusing on research and development. And next, sales, general, and administrative. This is a company that needs to sell its products, right? Their main things are products to customers. So I do think they should have a strong expense there. Usually, one does not like to see expense, but I'm the opposite. I feel like you need to double down in what you're strong on. If you need to use money to make money. So yeah, so these are the trailing 12 months of this. And just if you guys want to take a look, just like in my previous slides, it's Take-Two Interactive, EA Games, and Activision in that order for all of them. So let's take a look at the top chart right now. We have research and development. Research and development, EA Games has the biggest amount. It spends almost close to $400 million in the past trailing 12 months. And it's pretty consecutive with its past four quarters, looking at trailing 12 months. So that's one thing. That's another thing people should try to take a look at when you're looking at charts. Not only the actual value, you have to make sure if previous quarters has fluctuated a lot, and that fluctuation might give some red flags or something. So here I don't see much fluctuation happening in any of the companies. So there's no red flags in here in the research and development. But I do think it's pretty noteworthy to say that even though Activision is a lot bigger revenue-wise than EA Games spends a lot more money in research and development compared to Activision. Next, and then I did one again. My thinking process tells me that I've seen the catalog for both Activision and EA Games, and Activision has a more, in my opinion, has a smaller IP of games, but they're all pretty strong, right? Everybody knows World of Warcraft. Almost everybody knows StarCraft, Hearthstone, Overwatch, Call of Duty. So those are like the 5 games that Activision worries about. So I think they're pretty much, they only focus on expenses on those 5 games. So they don't really have to reinvent the wheel, right? They just have to upgrade their IPs on those. And that's what Activision is doing. Unlike EA Games has a dramatic amount. It has so many games. It takes a lot more money to do that, right? You have to spend money on each game individually. Another thing, again, we can see is, I guess this is another reason we can see Take-Two Interactive investors are willing to pay a little bit more for this company. This company spends so little compared to the other ones in research and development. We don't even have to look at the nominal value. We can just take a look at the picture of these. But one thing to note is every past quarter, trailing 12 months, it does seem to be increasing. So they are spending more money in research and development. And again, that means they're really focusing on providing great games. They're focusing on creating new games to get new customer base and again get more revenue. Next, let's take a look at SG&A, sales, general, and administrative expenses. And from here we can see, right, Activision spends the most here. And then it's pretty much similar charts for all of them. Activision spends the most, followed by EA Games, and followed by Take-Two Interactive. Take-Two Interactive actually spends a pretty close to EA Games for most part in the past few quarters. So that to me tells me that hey, they're trying to reach more customers. They're trying to increase their sales team. They're trying to increase their generals team. So that's just something to take a note of. Nothing else from there. Just Activision has a big expense there. Next, let's take a look at profit margins. So these are profit margins for the company. And again, just like always, it's first Take-Two, EA Games, and then Activision. And in the top chart, if you guys are looking at the video, top chart is quarterly profit, and the bottom chart is yearly profit margins. So Activision, if we take a look in both the yearly and the quarterly, seems to be pretty consecutive. And this is what I like to see, right? Consistency, especially in profit margins. In profit margins, I would like to see consistency. If it's going up, I want to see a consistency increasing, not fluctuation. And that's what I see in Activision. EA Games has some ups and downs. Most of the times Activision beats both EA Games and Take-Two Interactive. But there's these random quarters where EA Games has huge profit margins. And that's the result of one thing. If you guys have taken a look at their 10Q report, they do receive a lot of tax benefits from time to time. And here in these quarterly, these are when they've received these tax benefits. And even if we take a look at the yearly, on the years that they are higher than Activision's are the years that EA Games has received a form of tax benefit to allow to show higher profit margins. This is something I don't like to see. I want a company to be able to be consistently making profit margins based on its own accord and not some form of tax benefits. So I'm not a fan of EA Games profit margins for that reasons. I'm very fan of of Activision's profit margins because it is consistently. But if we take a look at the yearly, so the yearly is this dark green for Take-Two. I am a big fan of Take-Two's profit margins because look, it was decreasing, and we can see year after year it continues. It's making a step. It's making a step up, and it's now reaching that similar values to Activision and EA Games. So again, I can see this profit margins continue to increase, and that's why Take-Two Interactive investors are willing to pay that extra money for Take-Two Interactive opposed to EA Games and Activision, right? Where especially for Activision's, we already seen that consistency. They believe that Take-Two Interactive will be able to provide better results. So because of that, they are willing to pay a higher price. All right, next let's take a look at my favorite sheet to take a look at, and that's the balance sheet. And I feel like the balance sheet can tell you a lot about the company. So this is based on their most recent quarter. We have EA on top, Activision here, and Take-Two Interactive in the bottom. I kind of messed up the order here, but that's the order we have here. So here I just really want to talk about two positions, cash position and this company's debt. So EA's cash position is 3.6 billion in quick cash and 2 billion in current investments. So that gives this company about a $5.6 billion in quick cash, in my opinion. Activision has about $5.8 billion in cash and cash equivalents. They have no current investments. So Activision has about $200 million more of cash. Take-Two Interactive is actually doing pretty good. They have $1.74 billion in cash, and they have about $0.7 billion in current investments, which gives this company a $2.45 billion in quick cash. So we can see, right, the biggest right now is Activision with 5.8, followed by EA Games at 5.6, followed by Take-Two Interactive at 2.45. But now let's take a look at debt. So Activision is the leader in debt, sitting at $2.67 billion in long-term debt. So if we take a look at 2.7, so if we just do quick math, let's say 5.8 minus 2.7, that gives us 3.1. So Activision has about a $3.1 billion of cash positive. Next, let's take a look at EA Games. EA Games has a lot less debt than Activision. They have about $1 billion in debt. So that 5.6 minus the 1 billion has they have about $4 billion of cash positive. So EA Games definitely has the best, in my opinion, the best amount of cash ready at hand to use. So this is both Activision and EA Games have plenty of money, in my opinion. But EA Games shows a stronger compared to Activision because they have less debt and more cash. Next, let's take a Take-Two Interactive. And Take-Two Interactive, to me is the one doing the best. They barely have zero debt. They have $151 million, $151 million of debt, and they only have, and they have 2.5 billion dollars of cash or quick cash. So pretty much all their cash is, they don't have to worry too much about interest payments. They don't have to worry too much about going down because they have plenty of cash and it's pretty much a non-existent debt. So because of that ratio, I do believe Take-Two Interactive has a healthier thing. But EA Games, even though they have that, right, you can still have that. Having that is healthy, as long as you have plenty of cash to put it. EA Games is right there. All three of them, in my opinion, have a pretty healthy balance sheet. But to me, I like Take-Two Interactive because it's almost a zero debt, very high cash. Next, it would be EA Games because it has more cash. And Activision is still pretty healthy. They have a lot higher debt than the other ones. But again, if we take the net worth of their cash and cash equivalents minus their debt, they are still pretty positive. So now let's take a look at future games. So here I'm taking a look at, first, I want to make sure these companies are developing games and what type of games they're developing. So let's start with EA Games. So EA Games, the confirmed right now are Command & Conquer and a Star Wars game. And then we have very likely, we have FIFA, Madden, NHL coming this year, 21. They do that every year. And then all these games are going to be redone again for when the new generation of consoles come out in this holiday seasons. Some other unconfirmed but very likely would be EA Sports UFC, NBA 21, Need for Speed. At the end of the day, EA Games says that for this upcoming years, with these confirmed games or non-confirmed games, for a total, they want to release 4 sports titles. They want to do 4 franchise titles and 2 mobile titles. And then again, these titles will then come out again for the new consoles next year. So if we expect 4 sports titles, we're definitely seeing FIFA, Madden, NHL, and I'm going to have to put my money on NBA. Next, if we take a look at 4 franchise, we're going to see that Need for Speed. We're going to see that EA Sports, the Command & Conquer, and the Star Wars game. And then they talk about a mobile title. We're probably going to see a Star Wars game and maybe a sports game. If we take a look at Activision, Activision has a smaller IP, but in my opinion, as a gamer, right, I'm a type of gamer that I know more about Activision game-wise, then that's why I feel like they have a stronger IP. But I feel like people that are more into sports games will probably say that EA Games has a stronger platform. But to me, I think everybody knows Hearthstone, World of Warcraft, Diablo, Overwatch, StarCraft. So I feel like they have a stronger base. So for Activision, they're gonna continue to release content for WoW Classic. They have a WoW expansion coming up. They have a Hearthstone expansion coming out. They have Diablo Mobile doing. They have Candy Crush expansions. They have Overwatch 2 and they have Diablo 4. They just released Call of Duty 4 Mobile, and they kind of just released a new Call of Duty for consoles. So Activision has good. Then we have Take-Two Interactive. Take-Two Interactive, to me, I'm not too familiar with too many of their games, but they are releasing Outer Worlds, NBA 2K, future Borderlands expansions, WWE, BioShock, that's a good one, Kerbal Space Program, Disintegration, and they're trying to release a total of 10 new mobile games and they have them in various stages of development at the moment. And I do think mobile gaming is going to be a big thing in the future. And I feel like in most upcoming economic countries, that's where most of the market's going to go in mobile gaming, because in these countries, many people won't be able to afford a $500, $600 consoles. They're going to probably be coming out in this upcoming quarter. And so with mobile games, right, you do that free to play, and they have a higher chance and more customer base doing that. So for future games, I think all companies have plenty of games lined up for the upcoming year, so they're all doing good there. Next, let's take a look at valuation. So this is just a quick valuation based on Simply Wall Street, which is a service that I use. I never take their valuations too hard or anything, but I definitely like enjoying to see how other people would value this company. And they have this valuation process based on future cash flow. Right now, EA Games is the most expensive. They say EA Games right now is overvalued compared to its current price. They say a fair value based on this cash flow would be somewhere around $83. Next, we have Activision. Activision, they do say, is also overvalued. So it's overvalued by only $2. Right now it's at $58. And they say the fair value is somewhere around $56. I don't know if that's a fair value in my mind. But for Activision, anything below $55, I would 100% buy into this company. With EA Games, anything below $90, I would buy into this 100% based on what I'm looking at. Take-Two Interactive, which is the one that I thought would be the worst, is actually the better one. It's currently undervalued by about 40%. So Wall Street, simply Wall Street, is saying that right now you can probably make 40% money on Take-Two Interactive if it ends up going to its fair value. Right now it's sitting at $107, and they expect it to go up, or they don't expect it to go up. They say that the value of this company should be around $174. So that's just valuation there. And finally, my favorite thing right now, esports. I am I'm bullish on esports right now, and that's another main reason I am doing this. I want to find the best esports company. So let's just take a look at what they have. EA Games. So EA Games, they're saying their esports franchise portfolio will expand to 4 franchises this year. And I couldn't find the 4 that they're doing. I know they're doing FIFA, they're doing Madden, and they're saying they're going to bring Apex Legends. But let's just take a quick look. Maybe NBA 21, I think, would probably be the next one. So most likely be another sports game that would enter their franchise in EA and in the esports realm. So then Activision. Activision, I think, actually let's go to Take-Two Interactive. Take-Two Interactive is actually pretty small. It's the smallest in the esports realm out of all of them. Right now, they only have NBA 2K League right now, but they are working, and they did games that were live streamed in China on Tencent's program, Tencent. So that's a good. These are companies. These streamings are the ones I'm bigly bullish on. So Tencent. They also did streaming on TTWO and Huya. Huya is one of my biggest portfolios at the moment, sitting at 7% of my portfolio. And Twitch and YouTube. So Take-Two Interactive has the smallest portfolio out of all of them. EA Sports, I think, has the second best, but I think it's not as strong as Activision. Activision, I think, has really taken a head start on this esports realm. And again, another reason I'm a big fan of Activision. They have esports in Hearthstone. Hearthstone's very big. Overwatch, again, another big one. Call of Duty. All 3 of these have huge time leagues where even big time investors are investing. Gary Vaynerchuk, if you guys know Gary Vaynerchuk, has actually just invested in his own Call of Duty League team. And I would expect others to make the list. Maybe Warcraft, the strategy games, or World of Warcraft PvP might eventually end up in the esports realm. Finally, they made a deal with YouTube to be the exclusive content provider for Call of Duty League and Overwatch League. So again, esports, I think, is a very bullish time. To me, it's not going to be mainly on the games themselves, but I think the streaming services are going to be the ones providing the best results for investors. So that's why I'm pretty bullish on Huya. I'm probably going to do some more information on TTWO, and actually probably just do this kind of video on those 2 once their earnings come out soon. So results. Let's take a look at results for this video. First, we took a look at revenue. Activision showed the strongest revenue of them, so we're going to have to give revenue the first point to Activision. Then we're going to take a look at growth. The estimated growth based on analysis say that Activision is going to grow at a faster rate than both Take-Two Interactive and EA Games. So we're going to have to give another point to Activision. Next, we're going to take a look at research and development. Research and development, we saw EA Games is strongly focused on providing strong growth on their research and development and providing great games. So EA Games is going to take the research and development. Profit margins, the one with the most consistent profit margins is Activision. But for a shout out, I'm going to give a shout out definitely to Take-Two Interactive. I'll actually put a point on Take-Two Interactive here because profit margins for Take-Two Interactive is growing consistently year after year. I'm not a big fan of EA Games profit margins because they did have they do have pretty they have tax benefits pretty often that screw up their whole profit margins and show that they're doing a whole lot better than they're doing. Next, we're taking a look at the balance sheet. Balance sheet, a huge Take-Two Interactive point there. They have the almost zero debt, which to me is pretty good. Next, let's take a look at forward PE ratio. So based on forward PE ratio, Activision and EA Games give us a similar forward PE ratio of 20.5. For future games, I do believe all of them have strong IPs. Take-Two Interactive and EA Games have massive list of games for all types of gamers, but I think Activision's strong IP. One thing I forgot to mention, Activision owns Candy Crush, right? So that's a huge platform. So all of them get a point there. Valuation, Take-Two Interactive is expected to be way undervalued by simply Wall Street compared to every other one of them. All the other ones are actually overvalued. And finally, for esports, I'm going to have to give it to Activision because they have the strongest platform and they definitely have they're further ahead in the game compared to these other two companies. So for my thoughts, right, the winner at the end of the day is going to be Activision. Activision has both the biggest revenue and expected to grow the most. With only a 24 forward PE ratio, it's not too expensive for my taste. Obviously, I would definitely want it to go a little bit lower. So right now with this whole coronavirus, if I was to start a position, I would be opening a small position and add on from here on. But it does show the best profit margin and shows those values consistently, like I mentioned. I do think, right, Activision has the strongest IP when compared to the competition, with Call of Duty and the whole Blizzard franchise are just almost every gamer knows about these or have even played some of these games. Fine, the most important to me is definitely the whole esport, where I do believe Activision is like I said, a step ahead of the game, and it's something I'm completely bullish on. So I hope you guys enjoyed this episode. Let me know what you guys thought. Make sure to post on the comments. Have a good day and see you tomorrow, Monday. We're going to take a look at what earnings we're going to take a look at on Monday. On the weekend, since there's no earnings, I usually just decide to do my own videos that I want, the companies I want to take a look at. But during the week, I try to listen to what you guys want to take a look at. So I provide on videos that you guys want to see. So take care, guys. Have a good night and see you next time.